National Pension System is a contributory pension scheme where the subscriber invests in his working age to save for his old age income security. NPS provides a very efficient platform to all individuals to save and plan for their retirement. To encourage individuals and also employers to provide for retirement, tax benefits are available on contribution to NPS. In addition to the normal tax benefits available under NPS, to give impetus to the scheme, government has given exclusive tax benefits to subscribers at the time of contribution. Tax benefits for contributing in NPS are available for salaried as well as to the self-employed. For salaried people, tax benefit is also available on the contribution made by the employer in his NPS account. Employer also gets tax benefit for the contribution made by them under NPS, as the contribution to NPS is treated as a business expense. To understand tax benefits available under NPS, let us take an example. First of all, for a self-employed person, contribution up to 10% of the gross income of the self-employed is deductible from the taxable income under Section 80 CCD1 of the Income Tax Act, subject to a ceiling of Rs 1.5 lakhs under Section 80 CCE. For a salaried person, employee's own contribution up to 10% of salary, which is basic plus dearness allowance, to NPS are tax deductible under Section 80 CCD1 of Income Tax Act, subject to a ceiling of Rs 1.5 lakhs under Section 80 CCE. An additional deduction for investment up to Rs 50,000 exclusively to NPS has been provided under Section 80 CCD1B of the Income Tax Act 1961, which is over and above the ceiling of Rs 1.5 lakhs. Therefore, the total deduction that can be claimed for own contribution to NPS is Rs 2 lakhs. Employees also get the tax benefit on employee contribution to the NPS account. Contributions made by the employer up to 10% of salary, that is basic plus dearness allowance, can be claimed as deduction from the taxable income under Section 80 CCD2 of the Income Tax Act of 1961. Notable point here is that there is no monetary limit for deduction on employer contribution. For employer, the tax benefit is that they can treat the contribution up to 10% of basic plus dearness allowance made to each employee's NPS account as business expenses and get deduction under Section 36(1)(4)(a) without any upper ceiling. On superannuation or after 60 years of age, the subscriber needs to invest at least 40% of the total accumulated corpus towards purchase of an annuity plan for monthly pension, and the remaining 60% can be withdrawn as lump sum. Annuity can be purchased up to 100% of the accumulated corpus. The amount invested towards the purchase of an annuity is exempt from tax, and the monthly pension will be taxed in the year of receipt. No service tax is levied at the time of purchase of annuity utilizing the corpus of NPS. The amount withdrawn as lump sum is exempt from tax up to 40% of the total corpus. In case of death of the subscriber during the accumulation phase, the total accumulated corpus will be paid to the nominee or legal heir without levying any tax thereon. With these tax benefits, NPS is an attractive retirement long-term investment option, and this NPS account can be opened by any Indian citizen in the age group of 18 to 60 years.